welcome to the Pride Education channel. Today our most important topic is ledger. Let's move to the topic without wasting of time. A ledger is the principal record used in bookkeeping and accounting to classify, store, and summarize a business's financial transactions. It acts as the backbone of financial reporting, grouping raw journal entries into specific accounts, like assets, liabilities, revenue, and expenses, to form the foundation of financial statements. How ledgers work. In modern double-entry bookkeeping, transactions are first recorded chronologically in a journal. These entries are then posted into their respective accounts within the ledger. The formula: each account is typically structured in a T format showing the starting balance, all debits, all credits, and the final ending balance. Balancing: total debits must always equal total credits, ensuring the books remain balanced. Trial balance: ledgers provide the summary totals required to compile a trial balance, which is the necessary step before generating financial statements. Main types of ledgers. Organizations typically use a hierarchical ledger system to organize their finances. General ledger, the master record of a company's accounts. It contains 5 core categories: assets, liabilities, capital/equity, income, and expenses. Subsidiary ledgers, specialized ledgers used to track specific, detailed items that roll up into the general ledger, such as accounts receivable, customers who owe you money, and accounts payable, suppliers you owe. Specialized ledgers. Some businesses also maintain specific sales ledgers or purchase ledgers for day-to-day transaction monitoring. Why ledgers are essential. Financial clarity. They consolidate scattered data into an organized view, allowing owners to easily track cash flow and net results. Accuracy. They make it much easier to identify, track, and locate specific transactions compared to searching through a daily chronological journal. Auditing. Ledgers create a reliable, legally compliant trail of all money coming in and going out of the business. Thanks for watching. If you like this video, please share and subscribe to the channel and press the bell icon for the next video.